Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So as usual, we prepared weekly report. Since this week we've got mostly statistics on inflation, retail sales, we have digged it deeper. And actually, it is amazing to see how the same data might be telling about lower inflation and higher retail sales. At least this is how market treats it. But in reality, if you dig the same numbers a bit deeper, you watch on the components of the same indicators, you come to the absolutely opposite conclusions. That in fact, the same official data shows that inflation is higher and retail sales are lower. So I think that current report that we have prepared is very informative because it actually discovers moments where market is totally wrong. Particularly speaking, currently based on recent numbers that we've got, we come to conclusion that it might be really big surprises from the market in September. The tricky moment actually stands also with the dating of the European Central Bank meeting and the Fed. Usually Fed stands ahead of the European Central Bank, so it comes on Wednesday, Europe comes on Thursday, but this time will be different. This time, on 12th of the September, we've got Europe, and only on 18th, we've got the Fed. So this is really a very tricky moment, and we have made some thoughts about this situation, how we could use results of the central bank meeting, European Central Bank, to predict what will happen in the Fed meeting, because as you understand, it is naive to suggest that on the moment of the European Central Bank rate decision, they yet will not know what the Fed will do. Obviously, they will know. So we have tried to create a trading plan based on all this stuff and on the big market mispricing of these events, especially based on recent statistics. All this stuff is public, but you could make absolutely different conclusions. And we think that this is one of the topics that we could really write on. And if we will be correct about our both suggestions on the European Central Bank and on the Fed, that might be really win-win situation, and that could trigger really big volatility in September on the Forex market, especially in euro currency. But we still have almost a month until this moment. We will prepare at least 3 reports on this until this moment. So on the common week and in the nearest weeks until the meeting of the European Central Bank, euro will be driven by the same sentiment and thoughts that investors currently have. What they are particular, that the European Central Bank will cut the rate in September, which we are not totally agree, although the chances for that have increased recently, mostly due to the really poor situation in the industry sector in the European Union. But still, we hope that this will not happen. Second, is that market really very fast has forgotten about the recession fears, recovered really fast, and this market mostly come down a bit, but they do not know what actually will happen. And this is really big mispricing, I think, from the market. So that's briefly the subject of our report that we have discussed. I think you will find it interesting. So speaking about very short-term situation on the euro currency, so what we intend to do in the next week, here are a few thoughts on recent performance. First of all, on all time frames, euro currency keeps bullish context. So we're ready to consider even high standing targets. For example, next target on the daily chart will be XOP, around 1180. But here you can see that our bot stand relatively close, around 1070, and probably we should take into consideration this we can't stay focused directly on this target. At the same time, with the normal price performance, you could see that ABCD action, market hits probably COP or something, pullback, OP, pullback. So reaction on the OP already is done because market has closed above the OP. It means that here's this swing. It's already the it stands aiming on the XOP, which means that it should not be a reversal one. So we do not want to see drop at least below the 108.70. So these lows we consider as vital lows for a current bullish context. Market should not drop too low and should not take it out to keep bullish context on a daily chart. And so we consider this an invalidation point. Second important moment is sharp reversal here on Friday. It was really fast. And that actually explains why we many times talked about the bearish patterns that actually were formed on the lower time frames, and why we do not consider taking short position despite how attractive these patterns might be looking at. So for instance, our recent discussion of the free drive, it has started pretty nice, right? So great collapse. But here's a surprise on Friday. It reversed sharp. Target has not been completed at these lows. And divergence, well, currently under question. So yes, market hasn't quite broken up this top yet, but this is not really, this is some trick that not really good from the perspective of the bearish pattern. And these tricks happens very often when you have strong bullish context, and if even you have really nice bearish patterns. So you have to be careful dealing with them on the intraday charts. Now situation stands so that we suggest that at the beginning of next week, most probable scenario that market will try and challenge this top and reach some near standing target around 1070. What it could be? For instance, it could be, if you take a look at the hourly chart, it could be the butterfly. So if you will measure the extension, this will be approximately around this area. This is 1074. It could be reached. And in the beginning of the week, we could keep watching for some pullback to some of the fib levels. Because chances on downside A, B, C, D here that we were speaking about on Friday, as you can see, well, now looks phantom, so hardly will look at it, based on the shape that we have on the 5-time frame chart. So our central scenario suggests the upper continuation rather than deeper retracement. From that standpoint, we're considering only recent swing and fib levels where potentially position could be taken. If we will be able to take it as closer to the lows of 109.50 as possible, all the better. Because if butterfly indeed starts forming, this will be a great opportunity with a very small risk. Another reason why we think that direct upward continuation is more probable comes from the situation on the dollar index. If you will take a look at it carefully, this is 10-year bonds. On the dollar index, you could see that we have Friday's grubber. It suggests taking out of these lows, which means corresponding on the euro currency the same performance with the challenging of the highs, right? So this is another reason to suggest direct upward action, because I mean on the euro currency, because here tail closing, fast acceleration, no oversold on the dollar index. Well, it's really big challenge in favor of the possible collapse, and corresponding on the euro currency, this stands in favor of the immediate upward continuation. Immediate, I mean somewhere from this swing. So without any deeper ABCD action. That towards what we have in the euro currency. Let's see.